Have you ever wondered what the safest way to make money is? It's a question that has crossed many minds in the quest for financial security. The charm of a stable income, one that doesn't keep you awake at night, is universal. And yet, the path to it seems riddled with misconceptions and false promises. Many believe that safe money-making is a myth, a product of tall tales spun by charlatans. Others see it as a game of chance, a roll of the dice in the grand casino of life. But what if we told you that there is a method to the madness, a strategy to navigate the choppy waters of financial growth? This is not about overnight riches or unfathomable wealth. It's about steady progress, about building a fortress of financial security brick by brick. So buckle up, because we're about to take a journey into the realm of the safest ways to make money. Stay tuned as we delve deeper into the safest ways to make money. A penny saved is a penny earned, they say. This old proverb holds a profound truth, a truth often overlooked in the pursuit of quick riches and immediate gratification. Today we delve into the importance of saving money, a practice as old as currency itself. What is saving, really? It's the act of setting aside a portion of your income, not for spending, but for future use. It's a safety net, a cushion for life's unexpected twists and turns. It's the parachute that softens the landing when life decides to take a nosedive. Now let's talk about emergency funds. Imagine this scenario. You lose your job, your car breaks down, or a sudden illness hits. These are all situations we hope never to face. But life is unpredictable. An emergency fund is a stash of money set aside to cover these unforeseen expenses. It's not money for a rainy day, but for a financial storm. It's your armor, your shield, your fortress against life's financial emergencies. But saving is not just about protection, it's also about growth. Ever heard of compound interest? It's a magical concept, a wonder of the financial world. When you save money in a savings account, it doesn't just sit there idly. It grows, thanks to the power of compound interest. This is where your money makes more money, where each penny saved becomes a diligent worker, earning more pennies for you. The beauty of compound interest is that it works best over time. The longer your money is saved, the more it grows. It's like planting a seed and watching it grow into a mighty tree. Your savings are the seed, and compound interest is the sunlight and rain that make it grow. Indeed, saving money is the foundation of financial security. It is the bedrock on which we build our financial futures. It's not the most glamorous part of personal finance, but it is, without a doubt, one of the most important. Dabbling in the stock market may seem risky, but it doesn't have to be. You see, investing is not about making a quick buck. It's about planning for the future. And this is where stocks and bonds come into play. These are two of the most common forms of investments, each offering its own benefits and risks. Let's talk about stocks first. When you buy a stock, you're actually buying a piece of the company. If the company does well, your stock value increases. If it doesn't, then the opposite happens. However, investing in low-risk stocks can minimize this volatility. These are typically stocks from established companies that consistently turn a profit and occasionally pay dividends. They might not provide the explosive growth of a promising startup, but they offer a degree of security that's appealing to many investors. But even with low-risk stocks, it's important not to put all your eggs in one basket. This is where diversification comes in. By spreading your investments across various industries and companies, you can reduce the risk of a single failed investment, significantly impacting your portfolio. Now let's move on to bonds. Unlike stocks, when you buy a bond, you're essentially lending money to the issuer, which could be a government or corporation. In return, they promise to pay you back with interest after a certain period. While bonds generally offer lower returns compared to stocks, they are considered safer because the issuer is obligated to pay you back. Again, diversification is key. A well-balanced portfolio will contain a mix of both stocks and bonds, reducing exposure to market fluctuations and providing a steady stream of income. Investing is a long-term game. It's about patience and consistency. It's not about timing the market, but time in the market. The longer you keep your money invested, the more time it has to grow, and the more you can benefit from the power of compound interest. Investing wisely, therefore, can be a safe way to grow your money. Bricks and mortar have long been considered a safe bet for the cautious investor. Indeed, the tangible nature of real estate investments often provides a sense of security that stocks and bonds simply cannot match. The allure of owning a piece of the world, a plot of land, a dwelling, is undeniably powerful. Let's delve into the benefits of investing in real estate. The first advantage that often comes to mind is rental income. This is the revenue you'll receive from tenants if you decide to lease your property. It's a steady income stream that can significantly boost your financial health. Moreover, unlike other investments that may require a waiting period to see returns, rental income is often immediate, starting as soon as the lease agreement is signed. The second benefit is property value appreciation. Over time, the value of real estate generally increases. This means that the price you paid for the property today could be far less than what it's worth in the future. This appreciation can lead to significant profits when you decide to sell. However, it's important to remember that not all real estate investments are created equal. The key to success in this field lies in two crucial factors: location and market research. Location is paramount in real estate. The value of a property is largely determined by its surroundings. Is it near amenities like schools, hospitals and shopping centres? Is it in a safe, desirable neighbourhood? All these factors can significantly influence the value of your property. Market research, on the other hand, is about understanding the real estate market dynamics. It involves analysing trends, studying past sales data, and making projections about future growth. It's about knowing when to buy, when to sell, and when to hold. The real estate market can be complex and intimidating, but with careful planning, thorough research, and a keen eye for location, it can be navigated successfully. Remember, investing is not about getting rich quick. It's about building wealth over time. Real estate, if done correctly, can be a safe and profitable venture. Entrepreneurship is more than just a buzzword. It's a viable path to financial security. Picture this: you're passionate about a hobby or skill. Perhaps it's baking, designing, fitness, or even social media management. Have you ever considered turning that passion into a profit? Starting a side business can do just that. It's a low-risk, high-reward venture that could potentially pad your income and set you on a path to financial independence. Now, you might be wondering, how do I go about starting a side business? Well, it's not as daunting as you might think. And it all begins with market research. Understanding your target market, their needs, and the competition is crucial. It's like drawing a map before embarking on a journey. It helps you navigate the landscape and avoid pitfalls. Once you've got a grasp on the market, it's time to strategize. A well-crafted business plan serves as a blueprint for your venture. It outlines your business goals, the strategies to achieve them, and the resources you require. Remember, a good plan is flexible, allowing you to adapt and pivot as needed. But what about funding, you ask? Financial management is another key aspect. Whether you're bootstrapping or seeking external funding, managing your finances wisely is essential. It's about knowing where every penny goes and making sure it's being put to good use. It's not just about making money, it's about managing it well too. Starting a side business also requires grit, determination, and a willingness to learn. Understand that there will be challenges along the way, but remember, every setback is a setup for a comeback. It's a journey filled with highs and lows, but the rewards can be significant. So take a moment and think about it. Is there a hobby or skill you could turn into a profitable business? If the answer is yes, then it's time to take that leap of faith. A well-managed side business can provide a steady stream of income. So we have explored various safe ways to make money. With the bedrock of financial stability, saving. Putting aside a portion of your income regularly is essential. Then we ventured into the world of stocks and bonds, providing an opportunity for growth and income. We also highlighted estate investments as a tangible asset that can generate rental income and appreciate over time. And lastly, we discussed starting a side business, a path that allows you to take control of your income source and potentially reap significant rewards. Across all these strategies, two principles remain paramount: diversification and risk management. Diversification, or not putting all your one basket, reduces the risk of loss. Risk management, on the other hand, involves understanding and mitigating the potential downsides of your investment decisions. Remember, the safest way to make money is by taking calculated risks and making informed decisions. If you found this video helpful, don't forget to like, subscribe, stay financially savvy. Until next time.